Well, it is time to talk money matters. In today's economy, our retirement plans are more important than ever. Chad Tobin from Slagle Financial joins us with advice for avoiding common mistakes when it comes to investing. Well, good morning to you again.
Good morning. Glad to be back.
All right, this is one, we don't want to make you nervous at all. We really are just trying to help, okay? The number one issue that people may face is that they don't have clarity.
Well, yeah, and some common mistakes that we see on a weekly basis is, investors coming into our office and really they don't understand, number one, the investments they have. They don't understand the risk that they're taking, and maybe they don't understand the fees they're paying in those investments. So having clarity when you're investing is very, very important. A couple other things we see, Carol, is there's different phases of life that as investors that we have.
Absolutely.
We've talked many times on the show, accumulation and preservation. And so many times we see people that are in that preservation phase, maybe they're getting ready to retire, they've already retired, they're still investing like they were 30, 40 years of age.
Accumulation. And so, and to back up just a bit, accumulation where you can take more risk, generally you're younger, right?
Yeah, and I think you have a lot more time on your side. So, when we're in some uncertain times like we are now, in the market we do see some losses. We're maybe contributing to those, we're adding to those, and we have more time to make up some of those losses where some people in retirement are maybe having to draw an income and their time horizon has shortened as well. So a different phase of life, a different mindset, and making sure those kind of match what you are and how comfortable you are exposing your investments to risk.
And the mistake we make is not protecting.
Right, I think
our gains, not protecting our gains.
I think that's absolutely right. A lot of people, they have what's called, I read some books about behavioral economics and short-term memory syndrome. You and I, it's easy to forget, maybe if we were uneasy back in 2007 when we saw our 401ks and retirement plans lose quite a bit in that time. If we were uneasy, we've kind of forgotten about how we felt back then because the market's rebounded.
Well, and because we kind of want to.
Right, right. So as investors, we tend to forget pretty quickly some of those bad times. However, if you're not comfortable going back to those, it's time to really make that mindset and adjust your mindset to maybe be more of a protecting some of those gains that you've gotten back over the last few years.
But by the same token, Chad, and this is one that kind of took me by surprise, there is this investment mentality that is a mistake that we try to make up for prior losses.
It's like going to the casino.
I was just thinking Vegas. I was just thinking Vegas.
Yeah, and I try not to put myself in this situation too many times. But yeah, as you're gambling, and if you're kind of down, it's easy to kind of throw a little bit more at it to try and make those gains back up. And we see that happening with a lot of investors is, maybe they feel that they can still get some of those losses back. And in this kind of economic environment that we're in, with a slowing economy and problems overseas with Europe and Greece,
right.
These are affecting, this is affecting our economy. So, if hanging in there too long and we go through another downturn, it's going to be a lot harder to make up those losses.
And before I let you go, I think that when we talk about priorities and the mistakes we make in looking at our priorities, I wonder if a lot of investors are thinking I'm going to make as much as I can, and instead of thinking that I'm going to protect and I need to make my savings last. That's the whole goal.
Well, and I think with what we do for our clients, and they're really focusing at a certain phase of life, preservation seems to be one of their top priorities. So if that is a top priority for you, absolutely putting some protection, putting some, if you need that guaranteed income plan, putting that in place, and then making sure that exposure is comfortable that you're taking.
Good to see you.
You too.
I feel like I went to class today and I actually passed. Thank you, Chad.
Absolutely, you always do.
Chad and the team at Slagle Financial can help you start planning for your retirement today. Contact Slagle Financial 888-294-9248 or online at slaglefinancial.com. Matt?
Clearly, Chad is grading on a curve.
What?
I'm just saying. No, you did great. I take it back. You did great. He's a good teacher.